So what we're going to look at is another one of the provisions inserted in the Act to try and curb the malice of people trying to avoid taxation by keeping their black money with them, converting it into white money without paying tax using the loopholes of the law. I'm sure you're interested in knowing what it is. So I'm going to take you through section 51. We're going to look at section 56 to 9, which was inserted by Finance Act 2014, 269 SS, which was amended totally by Finance Act 2015. Again, just to curb the practice of what we are going to be doing. So let's to understand, just start with what we are talking about. We're talking about forfeiture of advance which was given for purchase of a property which did not go through. That's a normal situation. Let's say A is trying to sell to B. So let's say in the month of November, B gives an advance to A and they agree that in the next 2 months the balance money will be given by B. So let's say the period is 3 months. Let's say the advance given to A is, let's assume 10 lakhs. Now, normally B will come after 3 months, he will pay the balance money and the property will become B's. What if B does not come? What if B does not have the money to pay? What if B is going to forfeit that advance? Because that is written in the agreement. If B does not pay the balance money, A has a right to forfeit the money. Okay, so what is the treatment in the hands of B? Think about it. Has B given up a right to buy the property? Remember, there was an agreement to buy or agreement to sell in the month of November in favor of B. He had a right to buy. So when his advance is forfeited, his right gets extinguished. So there is a transfer. So we can simply say full value nil, cost 10 lakhs, and of course there is a loss. We've done this earlier. But right now, we are not here to talk about B. We've done that. We are here to talk about A. Let's see what happens with A. Now A has received 10 lakhs. There is a receipt. Question is it taxable? Now through all the rules of income tax that I've done with you, beta, remember we said all receipts are either revenue or capital. Revenue receipts are always taxable unless exempt by law, but capital receipts are always exempt unless specified by the Act. So in the hands of A, you tell me, is it revenue or capital? Yes, I'm sure you told me it is capital because it is in relation to a capital asset. Now, is it taxable in the hands of A? The answer is no, because there is no section taxing it. There is no transfer from A to B. So if there is no transfer, section 45 is not applicable. Therefore, here is where you have money which is being received, but there is no tax. Now, what can people do? Because you know what happens is, let us also go and look at what section 51 says before we come and talk about how people try to evade and how the law was amended. If I look at section 51, he says where any capital asset was in any previous occasion the subject of negotiations for its transfer, any advance or other money received. The other money could be any compensation for breach of contract. So advance forfeiture or compensation received and retained by the assessee. In our example, A. In respect of such negotiations shall be deducted from the cost for which the asset was acquired, or the written down value or the fair market value, as the case may be, in computing the cost of acquisition. So he simply says, if tomorrow you're going to be trying to sell this property, then the advance received or retained or other money received or retained will be reduced from either the cost, if the cost is your cost, or the market value was on 1401 if that is your cost, or any other value. He says the WDV in case of depreciable assets, to arrive at the cost of acquisition. Okay. So we come back here and look at section 51, how will it be applicable? So if A tomorrow tries to sell it to, let's say, C. Now let's say A is selling to C in the current year. Let's say full value of consideration is 1 crore and let's say stamp duty value is also 1 crore. So it comes to 1 crore as full value of consideration. What is this cost? Let's say A had acquired it for a total of 15 lakhs. Let's say he'd acquired it in the year 2010-11 and the advance was forfeited in the year 15-16. So in the year 15-16, nothing was taxed because it's a capital receipts. In the year 10-11, he'd acquired it for 15 lakhs. Now what will we do? While reducing the cost of acquisition here, What do? Do we say 15 minus 10? 5 is the cost and then we index it into index for 18, 19 divided by index for 10, 11? You tell me. Or do we separately index 15 lakhs first and index 10 lakhs first and then reduce it? Are you following the problem here? Very clearly section 51 said you will reduce it to arrive at the cost of acquisition, and cost of acquisition is as per 55. Indexed cost of acquisition is different. Yes, you get the point. So we will first subtract 10 lakhs. You get a cost of acquisition of 5 lakhs and then you index it. That is one. My second question, what if the cost in 10-11 was only 7 lakhs? What do you do now? While you are reducing the cost of acquisition here, 7 minus 10 is a negative figure. So capital gains will increase. Is that possible? No. So we've understood that if the advance forfeited was more than the cost, then the cost of acquisition is nil. Therefore, in the current year, while calculating capital gains, this cost will be nil. There's another issue that comes up. The issue is, if A gifts the asset to his son, let's say in the year 1780. Now, in the hands of A at the time of gift 47.3, nothing is, no treatment. In the hands of the son, receipt is not taxable as per 56.10, it's from a relative. Now, the son sells it to C. So we are now calculating capital gains in the hands of the son. Whole value is 1 crore. I need the cost. Yes, we take the cost to previous owner, which is actually, let's go back to the same example, 15 lakhs in 10-11. A had acquired it for 15 lakhs in 10-11. Now what happens? Do we reduce the advance forfeited by A? Do we reduce the advance forfeited by A in 15-16 while calculating cost of A's son? We'll have to read section 51 again. Where any capital asset was on any previous occasion the subject of negotiations, any advance or other money received and retained by the assessee. That's it. I'm not going further. Will be reduced. But it has to be retained by the assessee. Now in our example, who's the assessee? A or A's son? A's son. So we have a loophole here. Which means now A's son will be able to get the total deduction of 15 lakhs without reducing 10, which was forfeited by A. I'm sure you can find out the manipulations a lot of people can do. So before selling, they can gift it to a relative and he can sell it. Therefore, the advance that was forfeited was not going to be reduced from the cost. And if it is not reduced from the cost is higher. If the cost is higher, and in the practical world would take the advantage of indexation from A's year of acquisition as per CIT versus Manjula Jesha, which of course we are ignoring, but practical world mein they will take the, I'm sure, the benefit of that. That's one tax planning, which means advance forfeited will never be reduced. Second, if somebody is taken an advance for a property which he is not going to sell, there is going to be no reduction of that, which means this is a loophole here. So I'll tell you what used to happen. So as a CA, I remember a case wherein a client of mine came and he says, sir, I have income of 10 lakhs, you please file the return. So before you file any client's return, what you need to always look at is whether he's telling the truth or not. So the best is take the bank book and bank statement mein, then we look at whatever the receipts are, we look at the expenditures. So I could see his business income from receipts and expenditures was 10 lakhs. But when I asked him, I said, you're not living on love and fresh air. I'm sure you're paying rent of house, bijli, pani, electricity, water, school fees of children. When I looked at all his expenses, foreign travel was also there. Now it came to around 30 lakhs. I said, you're showing income of 10 lakhs, your expenditure is 30. Where did the 20 lakhs come from? Now this guy has a big smile on his face. He says, I've shown business receipts less. So I said, that is all okay. Now obviously I'm not going to tell you what to do, but I can't file the return like this. He says, sir, tell me what to do. Okay, I did not tell him what to do, but I can tell you what somebody else must have told him what to do. Somebody else must have asked him, do you have a house? So he says, yes, I live in a house. I said, what is the value of the house? He says, sir, it is about 5 CR. I said, okay, sell it. He said, no, I don't want to sell it. I said, I didn't say, someone else said, let's enter into an agreement to sell. Find out somebody who has money they can give you as advance. He says nobody will be ready to give. I said find somebody who has an entry. Now when you're taking an entry on the back date, obviously you can't take it by check, so you take it by cash. So he must have taken entry back date mein agreement to sell in the current year and forfeited it after 2 months and made it his capital receipt, shown it in the return, and there is no taxability because it's a capital receipt which is received and there is no taxability. Next year when he comes again, he has again a shortfall in income. I will say sell it again. Third year, sell it again. So if the AO asks, you show him the agreement, you show him the advance, and you say this is genuine, what do? I'm trying to sell my property, nobody is buying it, they give me the advance, they don't come back again. I'm sure you understand what we are doing. Now, how did law stop this? By making an amendment under 56(2)(9). They say the moment an advance is received for a property and the agreement did not go through. Let's read that. Any sum of money received as an advance or otherwise in the course of negotiations for transfer of a capital asset, if such sum is forfeited and the negotiations do not result in transfer, then that will be treated as income under 56(2)(9), which is on or after 1/4/14. So 1/4/14 के बाद, the moment you forfeit, Jaitley ji says, look, whether it is capital receipt or not, doesn't matter. I am specifically taxing it now so that you can't manipulate the law. Then, in the next year, that is 15, they introduced 269 SS. He says, no person shall take or accept from any other person, herein referred to as the depositor, any loan or deposit, and they added the words or specified sum, otherwise than by account pay check or account pay draft or use of ECS to a bank account. And specified sum means any sum of money receivable, whether as advance or otherwise, in relation to transfer of an immovable property, whether or not the transfer takes place. If you notice, this one is applicable where it does not result in transfer, which makes it income. This one is whether or not there is transfer or not. You have to accept the advance in account pay check. So if I come back here, now my friend over here, first of all, if he accepts this in cash, it's a violation of 269 SS. And as per 271 DA, the entire amount accepted in cash or otherwise done by account pay check or draft or ECS will be treated as penalty. So if it is 10 lakhs as Byana, 10 lakhs as penalty. If it is 1 crore as Byana in cash, it is 1 crore as penalty. Byana means advance. So that is done. You have to accept it in by account pay check, which means backdated advances can no longer be effective. Second, the moment you forfeit it, it becomes income, whether you sell it or not. So 51 becomes inactive. So we now have a summary. So we have a law which says before 1/14 and on or after 1/14. Before 1/14, the advance that you received is a capital receipt. It is not taxable in the year of receipt. When you subsequently transfer the asset, the advance will be reduced from the cost before indexation. If the advance is more than the cost, then the cost of acquisition is nil. But if you give the asset to somebody, then the advance will not be reduced from the cost to the transferee. On or after 1/14, if you forfeited an advance, it will first be treated as income under 56(2)(9), and now, of course, you cannot accept any advance in a mode other than account pay check or draft or ECS. So as you can see, the government has actually closed most of the doors for black money in property. Now in the next topic or subtopic, we are going to be doing a few questions on this.